Happy Sunday. It's my fun day. How are we all doing, gang? Hope everyone is feeling amazing today. We're gonna dive into this den of gambling and degeneracy known as Wall Street Bets. And this is a little bit more lighthearted than the usual stream. We're just in it for a good time. Hopefully, everybody will be amused by some of the memes and such therein. So, apparently there's some kind of rivalry between Elon Musk and Mark Zuckerberg. I keep seeing these memes where they're going to fight. Here we've got the stats. We've got Elon Musk, 51 years old, 6'1", 230 pounds, $236 billion. This must be like Twitter followers or something. What country they're from. Marital status for some reason. Elon divorced 3 times. Wow, didn't know that. Kids. I knew about the 10 kids from Elon. Hostile takeover, combat style. Brazilian jiu-jitsu for Zuckerberg. Didn't know about Brazilian jiu-jitsu for Mark there. The walrus for Elon Musk is the special move, and the meta kick for Zuckerberg. Who do you guys think would win in this fight? If you watch it later, comment below on that. I'd be interested in hearing your opinion. So, we're gonna hop in real quick and look at some memes. How everyone who locked in the under 3% interest rates on their homes are feeling right now looking at the housing market. Yeah, I feel that. Some people were very fortunate. A lot of people were very fortunate. There was definitely... I mean, and here's the thing. I knew the rates wouldn't stay that low forever, but at the same time, coming up with like the huge down payments that were necessary with how high prices have been and stuff would have been really burdensome on me. And I'm, living solo here, and it's like, do I really need that much space, right? That's always the question. Why don't we really quickly do a thing here? Let's see, can I get a link going? Yes, I can. Always a good idea to get a link ready to send it to the old Discord. I intended to do this a lot earlier and get out here, but I got sidetracked watching Netflix, not gonna lie. Alright, so we got the link out there. Hopefully some people will hop into the chat so I'm not here by myself, or I will get quite bored in the next 10 or 15 minutes. So I want to come back to this later, but this is an example of I guess what we would call the quote-unquote due diligence that they do on Wall Street Bets. This person. This is an interesting post. Market does whatever it wants. Isn't it all just robots and algorithms anyway? I have a room temperature IQ for starters, as do most smooth brain apes on Wall Street Bets, as they call them. But isn't this the first time in the past 5 to 10 years in history where the market no longer operates by human emotion? Computers have run the market since the 90s at least. But now, it's all algorithms and bots. There's no more human emotion playing as big an influence like it used to, given my IQ score. Doesn't it make sense of why the market does what it wants? Aren't these algorithms less likely to falter over human emotions like panic and fear? Thank you, and blah, blah, blah. So, with what we see in the market, I think it's pretty clear that there's still that human emotional element in the market, right? I mean, all I remember is, like, for example, Meta being like 90 bucks and even a little touch below that for a period of time. If that wasn't emotion, panic, and fear, I don't really know what is. Like, there is no question that the intrinsic value of the company is worth more than that price. Yet, that didn't stop it from falling to that point. The market is definitely not rational. It's not just all robots and algorithms. Retail investors have an effect. I would say I define the market as the sum of all of the decisions of the participants within the market. And I would still say that the average participant isn't using, like, pure reason and logic for their decisions. And that's just my observation. I could be wrong. I'm not saying I'm necessarily right, but I strongly believe that is the case. Now, here we go. Here's a simulation on what the fight between Elon Musk and Mark Zuckerberg would look like. Yeah, I mean, I have a hard time thinking of those guys as what we would call tough by any means, and they're both sort of, I guess, nerd icons in a sense, right? Puts on Logitech. I used this controller to control my submarine, and it ruined my business when we lost an entire crew because the receiver lost connection. I am now being sued by the families and have been financially ruined. I would not suggest anyone buy this item. In case anyone doesn't get the joke, the submarine, or sorry, it wasn't a submarine, it was a submersible. Got to use the correct word there. That had a catastrophic implosion while it was trying to visit the Titanic. They ran the thing. They steered it with a Logitech wireless gaming controller. So there you go. So this is like a pretend review of the controller by the person who was piloting the submarine, I guess. Now, by the way, the Logitech controller, as far as anyone knows at this point, I don't think had anything to do with the catastrophic implosion. That was more or less just, that was a function of the outer hull failing, because, let's be honest, the thing was, like, cobbled together from random parts that they found at Camping World, okay? This was not the kind of thing where you want to go 2 miles underwater with it, all right? And, I feel really bad for, like, the passengers, not so much for the CEO / pilot, but the passengers who paid, who maybe thought this was safe, right? Granted, they signed these waivers and whatnot, but yeah, I especially that, like, one of the people on board was only 19, and it's like, and the family is saying he felt pressured to go and all this, and that's not cool. But yeah, to a certain extent, though, I mean, you play a stupid game, you win a stupid prize, right? And yeah. Speaking of that whole thing, calls on Virgin Galactic. So when someone says puts on something, it means they want to buy puts, which are options, because they go up in value when a stock falls, right? And calls is the opposite, right? So they are saying calls on Virgin Galactic because Virgin Galactic was talking about commercial space flight. So the meme here is the like kind of React meme of 250,000 Titanic tour on Ocean Gate. No way. Virgin Galactic 450K space flight. Bingo. That's kind of funny. Not gonna lie, I laughed when I saw this one. Top comment. Technically, it's easier to make a spaceship hold air than a submarine not implode. It's just harder to get off the planet. Yeah, that's, it's an interesting point. Heads, your options live. Tails, they die. This is the chair of the Fed, Jerome Powell, and this is Two-Face, Harvey Dent from Batman. So that's kind of funny. Some pills are tough to swallow. Conducting due diligence before a trade, or red pill, say F it, we ball, and going all in. WallStreetBets, regards. It's a lot of red pills. Yeah, I would say that's what they do. That is what they do. Good stuff. Once you work at the Wendy's dumpster long enough, things get a lot easier to swallow. Wow, wow, wow. Wow, 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 wow. That's... Whew. I'm not going to go into detail explaining that one, guys. Found my new side hustle. Alright, Warren Buffett quote. If you don't find a way to make money while you sleep, you will work until you die. Well said, Mr. Buffett. Streamer made $16,000 filming himself asleep and letting viewers disturb him with loud noises. I found my new side hustle. That's awesome. I don't think that's what Warren Buffett had in mind. I think he might have been talking about finding good investments that just generate income without you having to actually be conscious and doing something. This top comment, wait a minute, but Warren Buffett is working until he dies right now because he's like 100 years old and still the CEO of Berkshire Hathaway. So, yeah, interesting. But then again, I mean, is it really work if you do what you love? I know, like, Buffett doesn't do what he does to live a lavish lifestyle. He still lives in the same house that he had in, like, 1972 or whatever. The dude, he doesn't care about having an opulent life. He just really, really, really loves investing. Like, he's probably, like, on the spectrum, to be honest with you. Okay, so I want to give some examples of bad WallStreetBets due diligence. And then I found an example, actually, of what, is probably better than typical due diligence. But this is the bad due diligence. Highly regarded investors, apes, degenerate gamblers, etc. I have some good news. Here's a play with some guaranteed volatility. Nikola, August 18th, $1.50 calls. So Nikola is at 129 right now. In the last year, they're down 76%. However, their all-time high is $65.90 thereabouts. So they're down like 98% or something from their all-time high. My goodness, my goodness. So what is this person doing? So they're buying out-of-the-money call options for late this summer. On Friday last week, I was feeling a little shaky, excited to start drinking. So I calmed my nerves by checking in on all my regarded investments. I noticed that I was only down 95.7% on Nikola instead of 98.5% like usual. Now I YOLO'd into these shares literally years ago, sold most of them, but kept a small number as a tombstone. To remember, to try and learn, I don't know why, but they went up for multiple days in a row and continue today. Now, because I'm regarded, I already bought out of the money $1.50 calls. I'm going to buy more, and I don't care who knows it. I'm going to buy shares too, because this is actually a winner. I know some people don't believe in the whole hydrogen thing, but try to have some faith, yeah? YOLO into some calls with me. Make it fun for yourselves. Make some money. Enough to burn in a fire and stay warm. Remember the old Wall Street Bets? The one that was cool, where people made and lost real money? But everyone just commented, stonks go up, stonks go down. You can't explain that. The actual due diligence, which is like a few sentences. Nicola's partnering with Volterra, who is funded by a Scandinavian investing fund with 25 billion. Okay, the fact that some investment fund that has 25 billion is investing, it's not really, I don't think that part is all that material. They have said publicly, we are planning to invest billions to build and operate up to 50 hydrogen fueling stations in the USA. They haven't said where the stations will go, but if they haven't said where they will go, I wonder where you're getting this information. 10 in LA, 1 or 2 in Phoenix, 1 in Austin, and the rest will be scattered along trucking routes. Nikola just axed its California-based group and moved everyone to the boonies. They are trying their best to make a profitable company while they try and sell trucks for $500K each. Stocks go up, stocks go down, but you can't explain that. So, Nikola. Okay, don't know why I went there, but okay, so Nikola barely has revenue. Okay, like they had tiny amounts of revenue and then zero revenue and then $50 million worth of revenue. Massively unprofitable revenue. Right? And they're diluting, of course, all their margins, their EPS, their cash flow, all that stuff. Negative. And the guy hears that they're doing something with hydrogen and just decides that's cause for a massive bet. I mean, he doesn't say how much money he's putting in, but apparently the fact that they're doing something and that the stock has gone up for like, I don't know, a few days in a row, for some reason makes him think that out of the money calls for later this summer is somehow a good idea. That's not really due diligence. It sounds like the guy like read one article on the Motley Fool or something and saw the stock go up a little bit, and that's the extent, right? Now, what I think is an example of somebody actually putting in something that might be a little bit more thoughtful. This is, and maybe I'm biased because I like the stock, but I think you'll see the difference on this one. CVS Health is too cheap to ignore. The investment thesis. CVS declined about 40% since its previous highs. The sell-off is likely due to investor dissatisfaction with its revised guidance, debt situation, expected increase in the medical care ratio. The medical care ratio, I think, is the difference between premiums collected and claims paid out. They expect more claims paid out per amount of premium collected, basically, is what I believe that translates into. The disappointment and concern of investors is understandable, but no means justifies such a devaluation. I would tend to agree with that. I looked at this stock just yesterday on yesterday's stream, and that definitely seems correct. At current prices, it is an asymmetric risk to reward ratio, and I will enter in a staggered manner. Optimize the risk reward for my position. Okay. Sounds reasonable. All right. Company background. We all know what CVS is, but they are more than just a retail pharmacy. That is 28.4% of the business, though. So they have this health services segment, which is a pharmacy benefit management thing, along with specialty pharmacy and other related services. Leverages its expertise, and it offers primary care, health clinics, home health services. So that's pretty interesting. Also, healthcare benefits. So this is sort of in the health, like, so basically they have more different healthcare benefits and health services type things than they do for actual retail pharmacy. And the retail pharmacy, you could say it's pretty saturated, etc. But I think most of the growth is probably expected to come from the healthcare benefits and health services. But at the same time, that's where you get the increase in medical care ratio, basically the cost of care versus whatever premiums, etc., that they collect being higher. So basically the margins are going to be squeezed in the healthcare part, and that's partly why their guidance has been revised, and that's the other part of this person's due diligence. CVS lowered its guidance for 2023. Revised diluted EPS guidance range was lowered to 690 to 712 from what it used to be 773 to 793. Now, yeah, that is a bit of a drop in the guidance, but cash flow guidance is the same and revenue guidance is up. So their revenue isn't going to be, their guidance for revenue isn't lower, and I mean, it's actually higher, and they're still going to have the same amount of cash flow from operations, okay? So this strictly just means that expenses of some kind are expected to be higher, which will lower their EPS. It's not a catastrophic amount, though. It just means that they're going to be a little bit lower on that than what they had previously expected. Now, I would probably, if I was going to run discounted free cash flow on CVS again, I would probably start with okay, if it would be nice if it would switch over. Perfect. Okay. All right. Maybe start with what they guided for, which is 7. That's halfway between the range, and that's the company's own guidance for this year. Now, I personally think that 5% growth rate on that is probably pretty low. I don't know what analysts are estimating. The person that suggested I covered them said 9 or 10, I think, on this, and I went with 7.5. So yeah, I mean, it definitely looks undervalued using the standard 10% discount rate. Yeah, I mean, yeah, we're talking like 15% return at today's prices if they can grow their EPS by 7.5% over the next 10 years. I mean, that's pretty impressive. Well, let me just double check. Does this person's DD talk about their EPS growth? I use a simple DCF model. They came up with a valuation of 104. So a little bit higher than what I came up with, but still, like, I do agree with them that it's probably undervalued right now. So that's kind of cool. So that's kind of Wall Street Bets. Doesn't seem like anybody was on to join the chat this time around, unfortunately. That's what I get for starting it too late. Hopefully some of you guys will watch this back and still get some enjoyment out of it. I'll definitely peruse this subreddit again in the future. Feel free to leave your comments, like and subscribe, And join us on Discord. Link is, as usual, in the description. Take it easy, everyone. Have a wonderful Sunday. Sleep tight. Don't let the bedbugs bite.